Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Tuesday, June the 23rd. The year's 2020. Let's talk trading. Not your trade, part two. Yesterday, Walmal and I talked about, you know, making sure you take your trade and you don't take trades that are not your trade. And of course, these videos are for educational purposes only. Your results may differ from mine. Trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. So I've got Walmall on the line. So did you take any trades that weren't your trade today?
Nope, I did not. I went and stuck to the plan and traded my plan, which is a good thing. And it's funny because that you say that because, yesterday, as you know, I did take one trade like that and, it worked out for me, but it may not have, but the thing is, it's funny when you trade your plan, sometimes you go and see a big move and it's like, oh man, I wish I would have had it. No, that wasn't my trade to take, so that's okay. In fact, there was one trade I think I was talking to you earlier today about. It was like, man, that would have been a nice trade to get into. And, and actually it wasn't today, it was yesterday, I think it was. And you said, no, that wasn't your trade. And you're right, it wasn't my trade. But it would have made lots of pips, but it wasn't my trade. So that's okay, and that's a good thing. And in fact, not too long ago, I went and jumped into a trade, got into the trade, was successful. My trading plan on this particular type of trade says you get 5 pips and you're out. And I got my 5 pips and I was out. But reality is that I could have, if I hung on to that trade, I could have picked up 20 pips. But that was not my trade. That was not what I was looking to do. That's, when I look at things statistically, I don't get 20 pips very often. And in fact, going and trying to hold on more times than not, it goes against me. So for my trading plan, that's not my trade. So I'm not going to do it. Are there other guys that would do that and be successful? Absolutely, but it's within their trading plan, not my trading plan.
Yeah, because in fact, we were trading together earlier. I think it was the past hour, and it was actually, it was a couple hours ago. I think I was, what was it? I was long somewhere around 40 something and got out right at 50.
Yes, sir.
And then, that can't, and the funny thing is, I had called out 60, but I got out at 50 because I was up like 4 something pips. And then, of course, it hit 60, and it continued all the way up in the next hour to the 2500 level. And then I said to Walmart, I said, if you look at the 1 hour chart, we didn't really have any closes above that 2500 level. So, and then if you dropped it all the way down to 90, I said, I want to be short at 90. He's like, why? I said, well, because I like that number, and because I look at the chart, there was only 3 hours that had closed above 90. So that was something that I was looking for. And then on this particular hour, remember for this month, we just want to take these H1 breaks out of the high and low, and you can see right here on the high minus previous high, that was only 2 pips. And sometimes that's all you get. And you have to learn to take them, because as price is moving against you, and it sometimes can move against you 2 pips or more in the blink of an eye, you just have to punch out. And then because on the trade before, you see here we had a break of the H1 the previous hour. Then we also had a break of the D1 high, which was right around the psychological 75, D1 yesterday's high. And it was these types of trades where when you're looking for them, they're simple horizontal line trades. You just have to take them, because if that's your trade, take your trade. Don't second guess it.
Because that's right. You take the breaks that you're supposed to take, And I like what you just pointed out. It's the fact that this hour, fine, the H1 breakout, may not have worked out for you. Maybe you were really good and real lucky and you were able to get 2 pips. More than likely, you probably took a little bit of a loss on that. But the the previous hour more than made up for that, because that previous hour, you look at that and you could have easily picked up 30 pips on that trade, if you stuck it out all the way to the top, So am I willing to go and lose, 2, 3, 5 pips on a particular trade for the potential of winning 30 pips? If that's your type of trading, absolutely you're willing to do that. And that's the thing. Is that your trade or is it not? If it is your trade, if that's your trading style, if that's what your trading plan calls for, you can't get upset about it. You just know you're going to take losses. Everyone, anybody tells you they don't ever take losses, I call liar.
Yeah. And
it's just
I was going to say, Walmal, also tell the boys and girls and non-binary traders out there, when we were talking about brain management a little earlier, that you weren't, about the aggravation you weren't willing to sit through.
Yeah, well, that's exactly right. Excuse me. I know myself. I don't like going through pain. It's just, maybe some people got a higher tolerance for it than me, maybe. But it was, we were talking about this idea, of, sitting there and waiting for those longer runs. Because the reality is, if you're going to go and get a 20 pip run or a 30 pip run, here's the reality, guys. You're going to go and get something that's going to go up. Maybe you're up 5, 10, 15 pips, maybe even. And it's going to go and retrace on you. And it's going to retrace all the way back down to, 5 pips or 10 pips. At some point in time in that run, more than likely that's going to happen. So you're going to go and retrace 50%, of your actual profit. For me, that's just too much. I do not like that. I'd rather just go and get the 50% and just walk away and say, hey, that was my trade. Good on you. I got my 50%. As opposed to, hey, I'm up, 30 pips, and now I'm only up 15 pips. Now I'm only up 10 pips. Now I'm only up 5 pips. And some guys go and do that, and they're able to do that. They're able to stomach that. And then it turns around, and then they're up, 30 or 40 pips. That's not me. That's not my trading style. That's not my trade. I've seen TRO do that, but that's just not me. I'm not going to do that.
Well, yeah. Well, and the thing about it is, once again, pain doesn't come from the market. It comes from your reaction to the market. And they always talk about, cut your losers and let your winners run. But the reality check is, when you're in a trade and you get in the trade from the get-go, you're in the hole. 1, 2, 3 pips depending on your spread. Or you're in the hole because you pay commission. And you got to get out of that hole to make money. And so once you climb out of that hole, those first 5 to 15 minutes of the trade, if it's moving slow, can really get to you if you don't have that brain management under control, because you could be up 2 pips and in a blink you're up 0.3 pips and you're like, oh man, and then the next thing you know you're down 0.7 pips. It's just like, and then you're up 2 pips and it's just like, do I take the 2 pips? Then you take the 2 pips and it runs 20 or 30, and then and then you've one of these brain management scenarios is going to play out. You're going to have some rogo, you're going to regret getting out, you're going to have Romo regret missing out, or you're going to have the Robs regret of being stupid, because you'll wind up kicking yourself. But you have to remember, trading is speculation about future events. And nobody knows what that next tick is going to be. Is it going to be an up or a down? And how far? You don't know, especially with these, now that we're playing in points and they can, they mess around with the points rather than pips. And it was like yesterday, I did a trade that I don't normally do, but I had gotten myself in such a mess, and it was like, I need a home run. So, I cranked up the lot size, and I took a breakout, and I got 7 pips. I was just shooting for 5, but the way price broke out, it gave me opportunity to take 7. But had I stayed, I would have had another 30 pips. I mean, at the size I was trading, I would have more than doubled my account because, like I said, I had gotten myself into a mess. But, that wasn't my trade to take it. I had a plan. The money was there to get me out of the mess. Bam. And that was because the mess, that was something, I did it to myself. So I created that pain by reacting to it. And what'll happen is that you get hurt on both sides, because if you do something you shouldn't do, or you fail to do something that you should have done, now you feel stupid and you feel that pain. And then when the trade goes your way, chances are you get out, and then it's like you're going to have some rogo because you're going to say, oh, I should have stuck in, because of all your emotional reactions, when what you really need to do is you get your plan out and you trade your plan. If your plan says get out at 5, you get out at 5, unless the market just moves so quick, you get out at 6 or 7 or more. And that's just it. So there's no emotional response. It's, what does my plan tell me to do? What does my plan tell me to do? What does my plan tell me to do? Over and over and over again. And you do what your plan tells you to do.
Yeah, and that's like, in fact, it was this hour I got into a trade, and what happened was the trade went against me, and it went against me like 6 pips, 7 pips maybe even, but the trading plan for that particular type of trade says that I let it go all the way to my stop loss. Normally, like with my Walmal method, I don't do that. But with this, I let it go all the way to my stop loss. Why? Because I've figured out that on this particular type of trade, more often than not, it will go that far against you before it turns and goes in your direction. Okay, fine. But I'm sitting there, I'm down 5, 6, almost 7 pips, and I'm literally sitting on my hands, and what I had in front of me is my sheet of paper with my trading plan for that type of trade, and I'm reading it, over and over, trying to convince myself not to hit the close button, because and just take that, that 5, 6 pip loss. Well, because I went and stuck to my plan, I was rewarded, and I got my 5 pips. Did I necessarily have to get my 5 pips on that trade? No, absolutely. I could have hit my stop loss. But I know by watching this type of trade, that this is, more times than not, it's successful. So I'm going to stick it out. And that's what I did, and I'm telling you, I don't care who you are, it plays with you. It plays with your brain, the market doesn't do it to you. You do it to yourself. And I'm sitting there thinking of all the bad things, I'm up a lot of pips today, and I'm looking at it from the perspective, I could wind up losing a big chunk of what I've won already today just because I'm sticking to my plan. Well, guess what? You stick to your plan because your plan works.
Yeah, and it's just like I mentioned earlier about that trade at 90, and you can see right here, this hour, the candle opened, we took the high breakout, but this 90 just so happened, this hour was a Walmal trade right there. You see the red line, so short there paid off over 10 pips. And you guys, if you're watching these videos every day, you see this every day. You can put up this simple chart, once again here, let me show you the indicator list, and really you can pretty much do it with just the sweet spots gold that I modified, because it paints the Walmal lines for you, and you put it on the H1. You don't need to put it on the M5 or M1 or anything else, and you just trade candle color at the line. There's 2 pips to the north and over 10 to the south, and it's right here. So we had 2 pips to the north, and we had let's see, this doesn't have the Walmal stats, but you know what? Walmal, once again, the fastest 15 minutes of trading is up. So fellow traders, I hope you're having a profitable week so far, and I hope that you're only taking your trades and you're sticking to your trading plan, and of course you've got your stop loss in place, and you only move it when you're supposed to move it, and you don't let any one particular trade go against you more than you're willing to lose. And keep in mind that it's not what you trade, it's how you trade it. So get out there and drain the banks. Rumple1 signing out.